I got on VOXX yesterday. I have 30,000 shares of VOXX. It's beating 600% EPS year over year. You can mark it. It's going to be double and triple this year. Double at least. Yeah, so what they do is they make all the acoustics and music and the screens for the cars, right? All the cars you drive, they are the ones who make all those devices, right? And they have been growing earnings like crazy. And that they reported earnings yesterday and their revenue came 82% and the sales EPS went 600%. So the way they are going, they would be hitting $1 billion in revenue next 2 or 3 years. I had a similar trade. If you want to see an example, XPEL. So what do the XPEL do? They make protective screens. You have Tesla, that's the screen you go to. You have a dent, scratch, or whatever. It's a screen. You take off the screen, scratch is gone. So I was bullish on it. The earnings came, last earnings. I alerted at $28, $30. It is $60 right now. So those are one of my biggest trade. I find the growth stocks with low float, low market cap, and the chart is breaking out. If the earnings is good, just get in and let it run. So that's what Voxx is going to do. Another DocuSign for this year. APPS. So these are the growth names which you can expect to double and triple, right? I don't want Apple. I don't want Facebook, right? I want a stock which I know would grow or triple or double in a year, 3 months. So even apps has doubled since my alert at 30. These are the names I look at. LMB, this has 5 million floor. The market cap is super low. Its revenue is 6 times what is market cap is right now. So if it beats next earnings, it's gonna go. I'm very small in it, but if it beats the earning, it's the same setup as my earlier setups. It's not ready yet. I will alert when I get in, so I'm just waiting on it. The one I'm going to talk about is ACAM. The thing with the SPACs is, right, if you have, a lot of space, you can hold it. You can just leave it there, but I would prefer something which is ready to move. I do have some which are close to, the par value. They have time to move. But one which I have biggest position right now, I have more than 100,000 shares of that, is ACAM. So let me quickly tell the story about ACAM. Car Lots, it's the company which sells the used cars. It's growing faster than Carvana. It's growing faster than Vroom. It's a profitable company. The business model is consignment model. And just look at Carvana. It went from $20 to $300, and its revenue went from 100 million to 1 billion in 3 years.
Wow!
What can CarLots? If Carvana can go from 200 million to 1 billion, in 3 years, imagine a company like CarLots, which has great reviews. Imagine what it can do. So after the merger, I'm gonna buy the shit out of it and just hold.
CLOV. Clover.
I like Clover. It's a good company. It's a high growth company. It's going to grow. But don't keep looking at it every day, asking for, it's dipping. Are you holding? Should I hold? But if you are looking at it every day, it's down, it's up, it's going to go to the moon. No. I already gave my thesis. It's a high growth company. It's going to keep growing. Have a position. Forget about it. GHIV was also I allotted under 11. I think it went to 14. I scaled out the rips. I bought again on the dips. I keep alerting the dips. So I'm in GHIV. It's a good one too. XPEV. XPEV was lagging behind other EV names. Their numbers are growing. Their sales in December came really growing. So today it broke out of 48 and the 48 level. That's a big reversal. If you see my chart that I alerted this morning, and this is going 55 and higher, 60. It can retest 50. That's another chance to add, or if it retests 48 level. But I think the reversal is in. Chart is beautiful.